What's going on, guys? We have got a bloody day in the market, and this comes right after one of the best days in the stock market's history. In this video, we have some tariff news to go over. We also had CPI release. We have some revised numbers from the Atlanta Fed for GDP, and we're going to talk about some other things as well. Now, we have recent news today that China tariffs were actually more than expected. Not 125%, but 145%. The White House confirmed this updated calculation today on Thursday. Now, we do have some positive news. CPI released, and it didn't go higher than expected. CPI increased by less than expected in March on an annualized basis, and also declined month on month. The problem is, though, this is a period before the tariff implementation, which could bring a future rise in prices. There's also a note here about the Fed minutes. Updated minutes from the Fed's meeting last month show that they were still worried about the twin tariff-related risks of 1, higher inflation, and 2, slower growth facing the US economy. We also have the Atlanta Fed GDP estimate. We do have a positive change here. However, the number is still negative, but less negative than it previously was. We previously had a 3.7% at one time. The latest estimate now is a negative 2.4%, which is also an improvement from the negative 2.8% earlier in April. This is going to be updated again on Wednesday the 16th. Now, I also wanted to remind you guys that PPI is coming out tomorrow. That's going to be something that can affect the market. Now, I want to highlight this article. This is Goldman Sachs' Anatomy of a Bear Market. Here's a list of every bear market, how long they lasted, and they categorize them into structural bear markets, cyclical bear markets, and event-driven bear markets, with event-driven bear markets usually being the shorter of all of them. The analyst believes that this is an event-driven one, but warns that, and I quote, it could easily morph into a cyclical bear market given growing recession risk. And while the damage can tend to be equal in either of these three categories, the length is what really differentiates them. Event-driven ones tend to be the most brief, perfect for dip buying investors. In reality, all of them are perfect for investors as long as you have a long enough time horizon. But I will leave this down below for you guys. I just think it's kind of interesting. Here's me hoping that this remains as an event-driven bear market, and we don't start getting deeper and deeper into recession territory. Here's a reminder that the best times to buy tend to be in bear markets. 78% of the stock market's best days have occurred during a bear market or during the first 2 months of a bull market. If you miss the 10 best days in the market over the past 30 years, your returns would be cut in half. Missing the best 30 days would diminish your returns by 83%. Is this a sign that we're in a bear market, seeing how yesterday was so amazing? Possibly. The best days happen in a bear market. This blue is during a bear market, and this is the first 2 months of a bull market. The majority of the best days are at this time, not even in the midpoint of a bull market or the tail end of a bull market. The moral of the story is take advantage of the stocks you love for the long term during times like these. Now, looking at the SPY, if we drop under the level we established back on March 7, if we drop under this, we're officially in bear market territory. We also have something else to be aware of, a death cross. It is pretty much going to happen at this point. During our last death cross in March of 2022, this did not at all mark the bottom. We did see a rally pretty much when the death cross printed, but that rally was short-lived, and then we went on to create new lows before bottoming out, before showing a golden cross. These are lagging indicators. They're not going to time the top for you. They're not going to time the bottom for you. You can tend to see these pops as a death cross prints. You can tend to see a drop pretty much right after a golden cross prints. Here was a death cross in 2018. We continued down right after that to then recover and hit new all-time highs. Here's another death cross. We bottomed out before that point and then continued to rally. So I guess my point is, if you're getting a death cross, it means we're already getting an okay discount from recent prices, and these are great opportunities to buy stocks. Another thing I'm watching is this descending resistance. If we can't break out of this, we're going to get rejected and possibly retest our lows. In the end, do not fear bear markets, embrace them. If it wasn't for our pullbacks during bear markets, you wouldn't see as many multiples. Imagine if we didn't have the opportunity to buy Bitcoin at 15,000, 20,000, 30,000. The lower something you believe in goes, if your theory is right, the more you will make on it. Be greedy during times of fear and be fearful during times of greed. I believe a pretty smart investor said that. He just so happens to be someone that doesn't like Bitcoin, but that's his loss in the end. But anyways, how are you guys feeling today? How were you feeling yesterday? Are you as optimistic as you were yesterday? In the end, you have to embrace the fear on the stocks you love for the long term. But that's all I got for you guys today. Let me know what you're buying in the comments below. Do you think we're going to be in an official bear market? Do you think we are entering a recession? What are your plans if we reach one? Are you going to remain on the sidelines during the bear market? Or are you going to DCA through it, knowing that you will make a lot of money once you get to the other side? And thanks again for watching, guys, and I'll see you next time.